In the ever-shifting currents of economic discourse, the narrative surrounding inflation has taken on a life of its own, ebbing and flowing with each data release, leaving pundits and policymakers alike to navigate the choppy waters. As the world holds its collective breath, the impending release of the July Consumer Price Index, CPI, data looms large, a barometer that could either calm the tempestuous seas or exacerbate the storm. The augurs, it seems, are cautiously optimistic. Whispers from the forecasting oracles suggest a modest uptick of 0.2% in both the headline figure and the core measure, which excludes the volatile realms of food and energy. While an acceleration from June's lull, the annualized metrics are expected to rise at a glacial pace, harking back to the halcyon days of early 2021, when inflation was but a distant specter. This easing of price pressures has emboldened the Federal Reserve's monetary mandarins, bolstering their confidence in the judicious application of interest rate reductions. For it is not merely the phantom of inflation that haunts their deliberations, but also the specter of a faltering labor market, which has shown unmistakable signs of weariness. The July employment report was a clarion call, a harbinger of potential recession, as employers scaled back their hiring efforts and the unemployment rate ticked upward for the fourth consecutive month. This grim harbinger triggered a domino effect, rippling through global equity markets and casting a pall over investor sentiment. Should the CPI data align with expectations, it would reinforce the narrative of a downward trajectory for inflation, a narrative that economists have embraced with cautious optimism. They attribute this anticipated upswing largely to the core services sector, excluding housing, a category that has become something of a talisman for policymakers. Yet, amidst the cautious optimism, there lurks a risk, a potential upside surprise in goods prices, fueled by the ever-rising costs of maritime transport. This specter looms large, a reminder that the tides of inflation are fickle and ever-changing. The long-awaited slowdown in shelter costs, which first manifested in June, is expected to persist, a harbinger of hope for those who have borne the brunt of this inflationary scourge. For this category, which accounts for nearly a third of the overall CPI, is a bellwether for the broader inflationary trend. Beyond the CPI, the Producer Price Index, PPI, will be scrutinized with equal fervor, its various components serving as harbingers for the Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Price Index, PCE. Amidst this maelstrom of data, other economic indicators beckon, each a thread in the intricate tapestry of the nation's economic narrative. Retail sales are expected to rebound, though the control group, the harbinger of gross domestic product, GDP, may tell a more muted tale. In this tableau of economic dispatches, we shall bear witness to the latest readings on inflation expectations, the sentiments of small businesses, the pulse of industrial production, and the ever-evolving narrative of new home construction. And through it all, the sonorous voices of regional Federal Reserve presidents will resound, their words carrying weight in the ongoing deliberations. Governor Michelle Bowman's recent utterances have struck a cautionary note, a reminder that upside risks to inflation and the resilience of the labor market may yet give pause to those contemplating rate cuts when the Federal Open Market Committee convenes in September. Turning our gaze northward, the housing starts data from Canada will reveal whether the Bank of Canada's back-to-back rate reductions have stoked the fires of new construction investment. Simultaneously, whispers of declining wholesale and manufacturing sales in June will echo through the economic ether. Across the Atlantic, the United Kingdom beckons, its economic tableau a rich tapestry woven from threads of wage data, inflation metrics, production numbers, and the ever-shifting patterns of retail activity. A narrative that will undoubtedly inform the Bank of England's deliberations as it navigates the currents of monetary policy in the wake of its initial rate cut and the harbingers of further easing. In the Far East, China's data deluge will offer a glimpse into the nation's economic pulse, a narrative that is expected to reveal modest improvements in July, even as the broader trajectory remains one of halting progress. Industrial output growth may have accelerated, but its pace would still be considered languid, a reminder that the path to economic revival is seldom a straight line. Retail sales, too, are anticipated to perk up, though the year-to-date tally may yet disappoint. Amidst this unfolding saga, China's credit growth is expected to have slowed, defying the recent rate cuts by the People's Bank of China and the subsequent reductions in loan prime rates. A reminder, perhaps, that the levers of monetary policy do not always yield the desired outcomes. Across the economic canvas, a myriad of nations will add their brushstrokes to the global narrative. Japan's second quarter GDP is expected to have rebounded, a glimmer of hope amidst the ever-shifting tides. Taiwan and Kazakhstan, too, will unveil their own economic tapestries, woven from the threads of quarterly output data. Australia, that bastion of the antipodes, will regale us with a veritable symphony of economic dispatches, from wage price figures and consumer confidence to the cadences of business sentiment. A rich tapestry, indeed, for those attuned to the nuances of economic discourse. India, too, will take center stage, its consumer inflation data anticipated to ebb below the 4% threshold, even as industrial output growth may have decelerated in June. The nation's trade statistics will add their own brushstrokes to the narrative, a reminder of the intricate interconnectedness of the global economic ecosystem. And amidst this grand symphony, the central banks will play their part, their deliberations and decisions reverberating through the economic ether. The Reserve Bank of New Zealand is expected to hold its official cash rate steady at 5.5%, though the potential for a surprise cut cannot be entirely discounted. In the Philippines, the monetary mandarins will convene, their deliberations cloaked in the shroud of uncertainty that has become the hallmark of our economic age. As this global economic narrative unfolds, it is clear that the tides of inflation, the currents of growth, and the eddies of policy decisions will continue to shape the discourse. And it is in this milieu that we, the observers and participants in this grand economic drama, must navigate, ever watchful for the harbingers that will guide our collective journey. For in the end, it is not merely data points and metrics that define our economic reality, but rather the rich tapestry of narratives that we weave, the stories we tell, and the interpretations we embrace. And it is through this lens that we must view the ebb and flow of inflation's tides, ever mindful of the currents that shape our collective destiny.